Morning, everyone. Thank you for attending today's webinar. This is actually a continuation from the Sales Summit that we hosted a couple of weeks ago. So as I promised with the life insurance and annuity presentation, that we'll have more to come. And here is our first step, or our first series of webinars. There's a 5-part series. And today we have Justin with us, one of our strategic partners. And then we have Chris, our other strategic partner. Justin is going to talk about the perfect pitch. And then Chris is going to go into an actual policy, how to do a policy review. So with that, Justin, my friend, here, take it away.
Fantastic, Bernard. Thank you so much for having me on. And I'm looking forward to it. You know, Chris had reached out to me and asked me to participate and gladly said yes. I enjoy doing this. Unfortunately, I love to do it in person a lot more, but crazy things with obviously COVID over the last couple of years. Don't get a chance to get out too much, but usually I have my video, and that way everybody can kind of see who's speaking and put a name and face together, but having some issues with video today from a color and delay standpoint. So I apologize that no one is able to see me, but we're going to, over the next few minutes, number one, we're going to have a good time. I know this is, a lot about life insurance. And as I was telling Bernard earlier, the biggest question I get, I've been doing this since 2007. The biggest question I get is, how do I have the conversation, right? How do I bring up life insurance? When's the proper time? What do I say? A lot of different questions. And I promise you, when we get done with this, I'm going to give you a very simple way to kind of have the conversation. And here's what I'll tell you, and it may sound crazy, but take the word life insurance and get rid of it, right? Throw it out of your vocabulary. Because we all know the minute we mention life insurance, and it's funny, I travel a lot for a living, and I always tell people, when I get done doing these meetings and I'm traveling back home, I'm pretty exhausted mentally. So when I get on an airplane, if I don't want to be bothered, when somebody asks me what I do for a living, I say life insurance. And I know from that standpoint, they're going to leave me alone, right? So it's a terminology, it's a word that we use that a lot of people, the minute we say it, they're like, okay, I don't need life insurance. Life insurance is too expensive. It benefits everybody but me. All of these different perceptions of life insurance. So we have to do a better job, myself included, of really talking more about what it does and not what it is. Because everybody thinks life insurance is expensive, or everybody thinks they don't need life insurance until guess what? They actually need it. And I've never met someone that said, I bought too much, right? So when you're having your conversations, and I know Mr. Bernard gave me a little bit of a background on what you all do for a living, and I work with several agents that specialize in the Medicare space. And not to get too far off course here, but I can remember having these conversations. You already have the golden ticket, and that's the client. So it doesn't matter what conversation you're having with the client. If you're doing a Medicare policy, so I can remember one lady I worked with a previous organization, thousands of clients on the books, and she probably wrote $250,000 to $300,000 a year of premium just in life insurance from her Medicare clients. And we got to talking, and the way she sets the conversation up was saying, hey, we got this plan in place. What's the one thing it really doesn't cover? What one major thing that could happen from a medical standpoint does it really not cover, right? And it's long-term care. So the question becomes, well, is that a concern for you? And it's a concern for me. Is that something you want to address? Absolutely. So she was using a lot of her Medicare clients, pretty much every one of them, to have the life insurance conversation, because we all know life insurance now, with the added long-term care rider and the built-in living benefits, that's a way to hedge that shortfall, right? So when you're having the conversation surrounding life insurance, what I like to do, especially with clients 50 to 55 and above, is to really ask one simple question. And that question is, do you mind me asking who's managing your 7702 strategy? Okay. And I can tell you the response that I get 99% of the time. And that response is, what's a 7702 strategy? Okay. All a 7702 strategy is, that is the actual tax code that life insurance falls under, just like a 401k. Well, the tax code is 401k. 403b, the tax code is 403b. 457, the tax code is 457. Life insurance tax code is 7702. That tax code tells us what we can do with life insurance. That tax code tells us how it's designed in a way that it becomes tax-free when we start taking out loans and distribution. So it's one simple question. And the question to every client should be, hey, you've done a great job at planning. You've done a great job at savings, but there's one thing missing. There's something I noticed we haven't talked about, or something you haven't mentioned to me. And that is, who's managing your 7702 strategy? Now, when they ask me, what's a 7702 strategy? Guess what? I don't tell them, okay? I already know what it is. My job is to educate the client and let them tell themselves what it is, right? That's how they're going to learn. That's how they're going to remember it. Because if I just go right into life insurance and I start talking about life insurance and products and features and benefits and all this, they're going to tune me out. Plus, they hear the word life insurance and they're automatically, they've got a guard up per se. So I always set the conversation up by asking, who's managing your 7702 strategy? And when they ask me, or they make a statement like, what is that? Or I have no clue what that is, here's what I like to do. I'll say, well, instead of me telling you, okay, let me educate you on what a 7702 strategy is. So for the purpose of this call, I want you to think of a client that's 65, maybe 70, 60, doesn't really matter. And you're sitting there and you're talking to them about whatever financial situation or product you're talking to them about. And then you ask that question at the very end. And I go into showing the client, hey, let's walk through what a 7702 strategy is. So I'll start by saying, here's what I want you to think about. Let's say you got $100,000, or you've got a client that's got $50,000 or $100,000. Okay. It's not going to be every client. The thing is, we don't know unless we ask, right? Because I found a lot of times when I ask the question, hey, talk to me about your lazy money. Talk to me about your 7702 planning. What are you doing? Do you have any lazy money sitting on the sidelines? That could be in a checking account. That could be in a savings account. That could be in a CD. That's all non-qualified dollars, right? That's money that had taxes have already been paid on. They're sitting in those low interest accounts. And the reason they're sitting in those accounts is because the client in their mind thinks, that's my emergency money. That's money that's being kept safe, okay? That's money I can't lose. Notice I said that's what they think, right? We all know if we've got dollars sitting in a CD that's earning 0.25%, where inflation's 7.5 and 8, we're losing money. We're losing buying power for that dollar. So I get the client to think about, for an example, let's assume they have $100,000. It's lazy money. It's sitting in a CD. It's not working for them, and it's not being leveraged. So what I like to do is I'll say, here's what I want us to do for the next 5 minutes. If you and I could put our heads together and we could literally build, create, design, whatever word you choose, your ideal savings account for this specific piece of your portfolio, this $100,000. If we could design the ideal savings account, what would that account look like? What benefits and what features would you want this account to have? And maybe what benefits or features would you not want it to have? So the very first thing I do is say, let's talk about the very first thing you would want this $100,000 to do for you. And listen, I'm going to tell you the first 3 things the clients say are pretty much the exact same across the board. So what I do is I say, okay, I'll say number 1, okay, what's the first thing you want your money to do? And every client will say, well, I want my money to grow. I'll say, okay, let's talk about, this 100,000, you want it to grow. Give me a realistic expectation of growth. And that's the key, right? if you really want this money to grow, what's a realistic expectation of growth? And I let them answer. And it doesn't matter what they tell me. All I'm going to do is write it down. I don't care if they say 20%. I don't care if they say 10%, 5%. Doesn't matter. Just write it down. So the first thing you want your money to do is what? Well, I want it to grow. Fantastic. Give me a realistic expectation of growth. And let's just assume they say 5%. I'll say, okay, so you would like to take this money. Let's find an account. The first thing you want it to do is grow at 5%. Is that correct? And they say, yes. I say, okay, let's talk about the second thing you want this money to do. Now, you may want it to do this, or what do you not want it to do, right? And most every client says, well, I don't want to lose it. I'll say, okay, what do you mean by not lose it? You don't want to forget where you put it. You know, what do you mean by I don't want to lose it? Well, I don't want to lose it due to market volatility, right? So I don't want to lose it in the stock market. So I'll say, okay, so you're looking for no market volatility. I'll say, fantastic, got it. What else do you want? What's the third thing you want this money to do? Well, I want to have access to it, right? They'll say, well, I want to be able to get my hands on it. I want it liquid. So I say, okay, let's talk about liquidity. So I write down liquidity. And then here's the question I like to ask. I'll say, okay, how liquid do you want it? Because we all know there's a difference between wants and needs, right? Needed liquidity might be 20% or 30%, but remember, this is the ideal savings account. This is getting them to create in a perfect world, what they would like to have. So I'll say, okay, so you want access to it. You want liquidity. So I'll say, how liquid do you want it? Well, 100%. Let's just assume they say 100%. So I write down liquidity, 100%. I stop right there and I say, okay, let's go back and review the first three things you've talked about. So in an ideal situation, this 100,000 or this 50,000 that you've got sitting on the sidelines, the first thing you want it to do is grow at an average over a long period of time, 5%, correct? Yes. The second thing you want is you don't want to lose that money due to the ups and downs of the market. So you don't want any market volatility. Got it. Third thing, you want to be able to get your hands on it in the event of an emergency. You want it to be 100% liquid. And they say, yes. I say, okay. So let me ask you a question. Where can you take your money today, allocate it to an account that's going to give you 5% growth with absolutely zero market volatility, and it's 100% liquid in the event that you need it? Where can you put your money today to give you all three of those? Client goes, nowhere. Or I have no clue. I say, okay, exactly. If this existed, when would you want to know about it? And they say, today. I say, okay. And how much money would you put into it? As much as I can. I say, fantastic. Number 4, what else do you want? And they'll usually say something like, well, I want it tax-free. I'll say, okay, what do you want tax-free? You want your growth tax-free, or do you want your distributions tax-free? And they'll say both. And I'll say, okay, well, let's make something very clear. You can't have tax-free growth and tax-free distributions, okay? There's a difference in tax avoidance and tax evasion. And it's about 10 years, okay? So you can't have both. So in order to get distributions, we need to have gains first. So how do you want your gains? Do you want those gains to be taxable every year? Or do you want your gains to be tax deferred every year? And of course they say tax deferred, okay? So I write down tax deferred growth. Then I say, okay, number 5, how do you want your income? How do you want your distributions to come out? Do you want those to be taxable, or do you want those to be tax-free? And of course they say tax-free, okay? So far there's 5 things that we found out. And remember, the client is telling you what they want. You may just have to ask a couple of leading questions, but they're going to tell you what they want. And I promise you the first 3 are always the same. The first 4, they'll say tax-free, but you have to specify the difference between the 2. They all say the same thing. So I said, okay, number 6, what else would you like to have? And you'll hear a lot of different answers when you get to number 6, right? You might hear income. Well, if you hear income, write it down. They may say guarantees. If they say guarantees, write it down. If they say low cost or low fees, write it down. If they say probate, write it down. It doesn't matter. But a lot of times, number 6, especially in the market you're in, is I'll say, is medical care a concern for you? And they say, absolutely. I'll say, how about long-term care? Is that a concern for you? Yes. And why do most people not have a long-term care policy in place? Well, cost, right? It's too expensive for their age, or they may not be healthy enough, they think. So I'll say, okay, well, what if we could give you some long-term care benefits? And I'll write down chronic illness. So what if we could give you some long-term care or chronic illness benefits inside of this account? Would you be okay with that? And they say, absolutely. I'll say, okay, what about number 7? What else would you like to have? Let's assume you don't spend any of the money. Let's assume you only spend some of the money. Where would you like this money to go at the end of the day? And they'll say, okay, well, I want it to go to my family, right? Or I want to pass it on to somewhere. So there's some type of legacy that they would like to have attached to their accounts. And they may not be married. They may not have children. It doesn't matter, because at the end of the day, it doesn't matter where your money's at. It's going somewhere. Well, I don't want to leave my children all this money. Okay. They'll just blow it, right? Well, there's things we can put in place to keep that from happening. But at the end of the day, your money's either going to go to the federal government, or it can go to something you care a lot about. So there's always some legacy aspirations attached, which, by the way, should be number 1. That should always be number 1, is legacy. But for some reason, it's always the last thing. And I tell my parents, bounce your last check, right? You worked hard, spend it. I don't need it. I don't want it. You go enjoy it. But if there's something left over, naturally, they want to make sure their kids and grandkids are taken care of, right? So in an ideal situation, these are the 7 things that I promise you all clients are going to tell you. All you have to do is ask the question, if we could build your ideal savings account, what would it look like? Now they're telling you everything they want. You're not saying a word. You're just asking the questions. It's kind of like being an architect, right? Or an engineer or a builder. People build custom houses because they can get what they want, right? They can design the blueprint. And if they don't like something, they can change it. This is no different. This is their ideal savings account. If they want to add income down there at number 8. If they want to add guarantees at number 9. If they want to add low cost, add it. It doesn't matter what they say, just write it down. Okay, this is the blueprint. So I'm going to assume for this call, here are the 7 things that the client told me. And 95% of the time, this is the 7%. I mean, the 7 things. So I go back and review. I say, okay, let's go back and review everything you told me that you would like to have if it were available. You're looking for an account that's going to grow your money at 5% on average. Absolutely no market volatility. 100% liquid. Tax-deferred growth. Tax-free distributions. Some long-term care or chronic illness benefits, and at the end of the day, you'd like to leave a legacy. Is this what you're kind of looking for? Yep, looks great. So where can you take $1 today, put it into an account that's going to give you all 7 of those? And of course, they say nowhere, or I don't know. Then my question becomes, well, if this existed, when would you want to know about it? Today. And how much money would you put into it? As much as I could, right? So here's my closing question to the client, is saying, if this is truly what you're looking for and you would like to have, why are you not already doing this? If this is really what you want, why are you not already doing this? Well, because no one has told me about it. I didn't know it was available. I had no clue what this is. So you're telling me I can do this? Well, who told you you couldn't, right? That's what I like to say. You're telling me this is available? Yeah, who told you it wasn't? Okay, I like to ask questions. I don't like to answer questions. I like to answer with another question. So they'll naturally say, well, what is this? Well, if you're telling me this is available, Justin, what is it? All it is a 7702 plan. Well, what's a 7702 plan? Well, it's the IRS code that tells us that we can use life insurance, cash value life insurance, and we can put our money inside of cash value life insurance. Can we get 5% growth? Yes. Is it subject to market volatility? No. Can I make it 100% liquid? Yes. Does it grow tax deferred? Yes. Does it come out tax free? Absolutely. Does it provide long-term care and chronic illness? It does. And at the end of the day, does it leave a legacy? Yes. So based on everything you've told me that you would like to have, it probably makes sense for you to take a look at a 7702 strategy inside of your planning. And they'll say, well, I didn't know you could do this with cash value life insurance, right? And here's what I like to tell them, or here's the question I like to ask them. How many drill bits did Home Depot sell last year? And their eyes kind of get big because they're like, wait, what? What did he just say? Well, how many drill bits did Home Depot sell last year? And get them to give you an answer. They'll say 1 million or 10 million, right? Let's assume they say 1 million. I'll say, okay, of the 1 million drill bits that people bought last year, how many of them actually wanted a drill bit? The answer is 0. They didn't want a drill bit. What did they want? They wanted a hole. And what's the most efficient way to get a hole in the wall? A drill bit. Life insurance is just a drill bit. That's all it is. People don't want life insurance because it's life insurance. They want life insurance because they want a legacy. They want chronic illness or long-term care. They want tax-free distributions. They want tax-deferred growth. They want liquidity. They want no market volatility. And they want some growth on their money. That's the hole. Life insurance is just the drill bit that gets them the hole. So if you create the ideal savings account and ask your client, hey, if we could put our heads together for the next 5 or 10 minutes and create your ideal savings account, what would it look like? And listen, you have to ask your clients, tell me about your lazy money. Hey, don't say, do you have any money laying around? Say, hey, by the way, let me ask you something. Who's managing your 7702 strategy? Well, I don't even know what that is. What is that? Let me ask you this. Do you have any lazy money? Tell me about your lazy money that you have. Money that's just sitting around in an account that's not doing anything for you. It's not working for you. Oh, well, I've got 30,000 or I've got 100,000 or I've got 70,000, whatever the number is. They say, well, I've got that sitting in a CD. Well, tell me why you have it sitting in a CD. Well, because I can't lose, or because I can get my hands on it. Okay, well, who told you couldn't lose? Well, I mean, if I put 100,000 in, I'm going to get 100,000. Well, yeah, but where's inflation at? So inflation's 8%. You're only making 0.25. Do you think you're losing purchasing power? Is that $100,000 today still worth $100,000 next year? No. So is it really safe? Are you really not losing? Well, I never thought about it that way. Well, if there was a better account available, would you want to know about it? Well, sure. So let me ask you this. If we could create your ideal savings account, you and I together over the next 5 minutes, what would it look like? And just let them build the ideal savings account. So think about this. How many times did I say life insurance? Maybe once at the very end when I told them we were using cash value life insurance, right? It's not about the drill bit. It's about the whole. It's no different than a Roth IRA. Why do people put money in Roth IRAs? It's because it's tax-free. It's not because it's called a Roth IRA. It's because of what it does. It's what it gives them, right? So every client that you're sitting in front of, whether they're 50, 65, doesn't matter. Don't lock in on an age. Lock in on the questions. Who's managing your 7702 strategy? Talk to me about your lazy money. If we could create the ideal savings account, what would it look like? And have them build that. I'm telling you, it's very simple. It's easy. They have built this. You're just the contractor, right? They're telling you what you want, what they want. You're building the plans. You're putting together the blueprints. And you're just making it happen. So I'll stop there. Bernard, I'll turn it back over to you to see if anybody has any questions. Okay, so Linda asked the question, which carrier or product offers all of the benefits that you just mentioned? There's several. So at True Choice, we work with over 30 different carriers. There's multiple carriers available that will give all 7 of those benefits. Okay, so that all comes down to, for example, liquidity. There's a couple of carriers that we can get 100% liquid. Okay, so it all depends on what their 7 ideal benefits are, but there's multiple carriers out there: Allianz, North American, National Western Life, several different carriers. If long-term care is a focus, then obviously we've got carriers where we can make long-term care a focus. So from a carrier standpoint, and that's where Chris comes into play, is Chris has got access to all those carriers. So based on what they're looking for, he's able to take that information and match it up to the best carrier. So the next question, what if there is no lazy money? How do you move forward? Well, it goes back to, great question. It goes back to who's managing your 7702 strategy, right? Because 7702 strategy is just the tax code for life insurance in general. And as I mentioned, you're sitting there writing a Medicare policy on somebody. What's the one major medical event that's really not covered, right? We know that's long-term care. And Bernard, you can correct me if I'm wrong. What's it cover? 21 days, maybe? Something like that. Very, very minimal coverage. So I always make sure the agents I work with in that market point that out. Ask the client, hey, we've just put this policy in place. Do you know what one major medical event that could happen to you? By the way, 70% of the people who reach age 65 will need long-term care. Is long-term care a concern? Yes. Well, that's the one shortfall inside of what we just did is, what if you do go into long-term care? How are you going to pay for it? Right? Is that a concern? Yes. So now you're into maybe a life insurance policy with a long-term care rider. You're not talking lazy money anymore. Okay. So that's why I like asking the 7702 question. That's why I like asking the lazy money question. That's why I like asking the long-term care question to Medicare clients, because I can go multiple different directions. Does that make sense? Perfect. Linda also had another question.
Yeah.
How do you get them to desired cash value life insurance over term? Great question. Okay. Everybody thinks that term insurance is the least expensive insurance that they can buy. Okay. That's incorrect. Term insurance is probably the most expensive life insurance that you can buy. And here's why I say that. It's if you look at it from a net out of pocket cost, yes, the premium up front on a monthly basis is significantly less expensive than cash value life insurance. However, 99% of the people that buy term insurance will not die within their term period. So as an industry, 1% of the people that have a term insurance policy will actually get to benefit from it. So what I like to do is say, okay, you're paying $1,000 a year for term insurance. What's your cash value after 30 years? 0. What's your death benefit after 30 years? 0. So how much did it cost you to buy that term insurance policy? Well, it cost me $30,000. Okay, so that's your net out of pocket, $30,000. Okay, let's look at the cash value life insurance. It's $5,000 a year. Okay, after 30 years, what's your cash value? Well, let's assume it's $200,000. Okay, so what's your equity? You paid $150 in premium for 30 years. Your cash value is 200. What's your equity? Well, I've got 50,000. That's correct. What's your death benefit? Well, it's still 250,000. Correct. So in this example, the term insurance cost you 30. This example, you made 50. So that's an $80,000 difference. So when you look at it from that standpoint, which one's more expensive? The one that cost you 30 or the one that made you 50 if you walked away? Okay. So you have to look at it. And I get some people, they can't pay the $5,000. But what I like to do is I at least like to educate. This is all about education. It's no different than renting versus owning, right? So when I get that term versus permanent, my sister-in-law said, hey, we need to get some insurance. I said, okay, you want temporary or permanent? That's all I say. You want temporary or permanent? Well, I mean, I only need something for 20 years. Okay, well, do you plan on dying in the next 20 years? Because if you can tell me when you plan on dying, I'll buy you a policy that's in force one day after that day. And that'll be the best and the cheapest option you can find. Remember, it's perception and reality. Perception is term insurance is cheap. It is from an out-of-pocket standpoint up front, but 99% of the people who own one will never, ever see that death benefit. That's why it's priced so cheap, right? Out of pocket up front. It's because insurance companies are smart. They know life expectancy. They know that there's a 99% chance they're never going to pay that claim. Okay. So that's how I have that question. It's building equity versus paying rent. Linda, does that help?
Mm-hmm. Yep, Justin, we have another question from Tracy. Do you offer a questionnaire or a client data sheet we can use for the planning process?
Absolutely. So that's where you'll get with Chris. So we've got, several different fact finders that we can use, whether that's from a certain carrier or Enforce Solutions, which is our new business team. But there are forms available that, yes, that Chris can get in your hands that you can use in the field to do field underwriting.
Yep, and then I also believe we can, what Justin talked about today, maybe we can put that into a format for the agents, and we can probably do that as well.
Yeah, what we can do is we can type. It'll have to go through compliance.
Yeah.
So we'll get with Chris and see what we can do on that standpoint.
Yeah. All right, then Cassandra has a question. It is a life policy with the long-term care rider, and that was her question.
Yep. So how soon is the long-term care option available? Day one. Okay. So the first day the policy is in force, let's say it's a $100,000 policy. If it's got the chronic illness rider built in or the LTC rider added to it, it's available right away, first day. However, there's usually on most carriers, and when I say most, 9 out of 10, there's a 90-day elimination period. So the first 90 days, the client covers the cost. And then after the 90 days, if they can't perform 2 of 6 activities of daily living, they send that information into the insurance carrier. And that's when the process begins on getting percentage of their death benefit to cover those costs.
All right. From Andrea, what is a life insurance plan that you like to offer clients that only have $1,000 to $5,000?
That depends, like I said, it depends on the client. If they've only got 1,000 or only got 5,000 as far as a lump sum goes, may not be a fit, right? But Chris can definitely look to see if there's some smaller whole life contracts out there, and it depends on client's age. But here's the deal. The good news is you got them thinking about, hey, I've got this 5,000, and it may be that we can't do a single premium, but there could be other options to where we take that 5,000 and maybe spread it out, right? So great question. Take the information they give you, and that's where Chris comes into play. Another question, can you reduce the elimination period? No, that's you can on standalone long-term care. I don't even know if you can go below 90. There might even be a 30-day option, but we don't do standalone long-term care. all the life insurance LTC riders and built-in ABRs do have a 90-day elimination period built into it.
All right, folks, I don't see any other questions. So what we will do, Justin, my friend, thank you.
Absolutely.
And actually, I'm going to use this in my client presentation. I like this.
Yeah, it's simple.
So next,
use it,
yeah,
make it your own. make it your own. You know, I always tell people when I do these meetings, take what I say, but make it your own, right? The biggest challenge, and I'll tell you this, Bernard, the biggest challenge of 15 years of doing this is just actually using it. That's the biggest challenge is taking these great ideas that we all hear from other people when we get back to reality and emails and phone calls and family and clients. And then we're like, what did he say? How did he say that? What was that again? Right. And it kind of gets put to the side. So yeah, use it. You can't mess it up. And I'm here. Chris is here. If you have somewhere where you struggled, given the presentation, let us know. That's our job.
Mm-hmm. One more question, and then we'll go on to Chris. Most recommended whole life carriers.
Chris, you want to jump in, or you let me know?
Either or.
So whole life carriers, and it's, all of our books of businesses are different. If you're looking for cash value whole life, I typically go towards a Mass Mutual. If you're looking for, hey, I need $100,000 of death benefit, who's the least expensive premium? Typically, it's a Lafayette Life. Could be an option, but we take the client's information and we run it through our system internally in our database that literally pulls every carrier and tells us what their premiums are going to be. So we can do all that work in the back office for you.
Right. And then, we have our recommended carriers for whole life, but let's also understand too, whole life and IUL. If your client is looking for guarantees, whole life is the best way to go. If a client is looking for accumulation, then there is the universal life or the IULs.
Yep. And if you're just looking to, something I'll throw out there too, Bernard, if you're just looking for something guaranteed for life, with all the cash value stripped out of it, basically it's like a term insurance policy for life. GULs are very competitive. So, that's another option as well. Yep.
So let's get this on over to Chris so he can go over his policy reviews.
Fantastic, guys. Thank y'all so much for the opportunity. I appreciate y'all giving me a few minutes this morning.
All right. Thank you, Justin.
Thank you.
Thanks, Justin.
Thank you, Chris.
All right, buddy. All right. Am I able to be heard?
Yes, sir.
All right. First, I'd like to let everybody know, I don't know what's going on here. Something on my end. Every time I get a phone call that's coming in, it's kicking me off of the webinar. So if that happens in the middle of this, I'm extremely sorry. Bernard, how do we get to my screen being shared here? Do I need to do something? Is it I just hit the screen share?
Yeah, Chris, let me stop sharing mine.
Yeah.
Okay.
So that way now you should be able to share yours.
Yep.
So again, Justin, thanks a bunch for everything that you did. I'm sorry for being clunky over here, but what my part of this presentation today is going to be is discussing a little bit about how easy it is to have a life insurance discussion with your clients, with your prospects. Somebody had sent a message over before after Justin's presentation, and they asked, hey, what if there's no lazy money? What do we do then, right? So here's a presentation that I do with a lot of the Medicare supplement reps that I work with, okay? A lot of P&C reps that I work with. And this is not anywhere close to as in detailed as what Justin just went over with you. And that's really for a point or for a reason. What you want to do moving into your client presentations when you're seeing your folks, whether you're seeing them for Medicare supplement, whether you're seeing them for an annuity, whether you deal with investments, whatever it might be, let's make sure that life insurance becomes part of the conversation. And one of the easiest ways that you could do that is to very simply ask your clients to get you their statement. Ask them where their current life insurance is. The reason this question is so powerful is for those of you that are not comfortable with having the life insurance conversation, don't know where to go with the life insurance conversation, or are just, out and out scared of, hey, could it cause a decline that messes up the rest of what I'm trying to do with my clients? What this question allows you to do is simply understand where their current life insurance is. And with that understanding, with that question, we're really going to get three different answers as far as what I could see. You're going to get told, sure, here's my life insurance statement, and this is who it's with. Now you have the information and the ability to move forward, right? The next question or the next answer that you might get is, I don't have any life insurance. Well, again, this is where now we know we have the ability to work and help somebody with a need that they most likely have. And the third answer that you could get is, hey, yeah, I got life insurance, but I like the guy that helps me out. And that's perfectly fine. The way I see this is 2 out of 3 is a win for you and easy for you. So when we get an understanding that they have life insurance or want life insurance, what I'm able to do for you is we have a 2-part system where we call it a policy review. And what I have on the screen that you guys and ladies can see right here is our life insurance fact finder. All right. Now we call the fact finder, but really what this is going to do for you is get an understanding of your client's health and what they're trying to accomplish. And as you go through and answer this, some of these questions you might already know from other work that you've done with your client. But what I'd like to ask you to do is get these basic pieces of information and get them back over to me, including the last page here. With everything here, we've made it where it's very easy for you to, answer some questions that we might have, and you can see these and get them done. Now, as we move forward with this, and after we get those questions, if we have a statement from your client, a policy statement, we could go through here and simply ask you to fill out the top of this form. All I'm asking for is the insurance company's name, their fax and phone number, the policyholder's name, and the policy number. I don't need you to fill out anything else on here except get to the back page and get your client to sign this. Now, here's the beauty of the whole program. The beauty is all I am asking you to do is start putting into your presentation a piece where you ask about their current life insurance program. Who do they have it with? What are they paying? What type of insurance do they have and why did they get it? Okay, just ask them what that's going on with their current life insurance plan. I will then do all the heavy lifting for you. Okay, simply get this signed, get the information. What I'll do is I'll do a full review after I get an in-force illustration of their current policy. And we'll come back and tell you any options that your client needs to look at taking advantage of, i.e., what can you do to help them out? Either way that this goes, you're going to come out looking good. Either we're going to find out that their current policy is in good shape and they're okay. Now your client's thinking, hey, that's a great service they did for me. Or we're going to find out that they have a policy that might expire before they do. Maybe we could save them money. Maybe for the money that they're paying, we could get them more insurance coverage. Either way, you're going to be going back with a positive notion of what you could do to help their overall program be put into a better situation. Now, back to what I was saying, though, again, this is not as elaborate and in detail as what Justin showed you, but the point that I want to make here, everybody, is it's simple. It's easy. All you need to do is ask the question, where do you have your current life insurance? Do you currently have life insurance? What are you paying? However you want to ask it, just ask them, because they're going to turn around and give you a wealth of information with their answer. So if anybody has any questions, go ahead, shoot them over. And I know there's not a lot to this particular deal, but this is a great program that we've been able to help a lot of advisors that don't specialize in life insurance easily increase their revenue by starting to do it.
Chris, we appreciate you, my friend. So what we're going to do, as I was saying before, I mean, we can do one-on-one virtual trainings for folks. I mean, to go over what Justin talked about, to go over the fact-finding form that Chris has. You'll also be receiving the fact-finding forms to use with your clients. So please take us up on the one-on-one virtual trainings, because you may want to get more in depth into the many facets of this. Or, I mean, if this is enough, this is fine. And what you can also do is, if you have cases, instead of getting contracted with a bunch of carriers, send us the case and let us go over that case, and then we'll recommend the carriers that will fit your client's needs, and then we can get you contracted that way. But I will send out the contracting link to everyone as well. So if there are no other questions, Justin and Chris, I really appreciate you taking the time to help us out here. And with that said, folks, again, thank you. More to come. We're going to have 5 other presentations next week, and then the week following. So like I said, at the Sales Summit, we're going to keep this moving and get you guys wanting to offer life insurance. So folks, have a great rest of your week and take care. All right.